In December 2020, 14 researchers quietly walked out the door of the most talked-about artificial intelligence lab in the world. They were walking away from OpenAI entirely. Leading this group were Dario and Daniela Amodei. At the time, Dario was OpenAI's VP of Research, one of the primary architects behind the early GPT models that kicked off the current AI boom. Daniela served as the VP of People and Safety. Inside the lab, a sharp divide formed. The team firmly believed scaling these models further would trigger massive jumps in performance, but that doing so without baking safety constraints into the core architecture was a dangerous path. They felt caution was being sidelined for speed, so they left to start their own company, Anthropic, but they structured it specifically to operate as a public benefit corporation. This is a legal designation that allows a company's board of directors to prioritize a specific mission, in this case, ensuring powerful AI helps humanity, over making pure profit for shareholders. By legally binding their new enterprise to prioritize human safety above maximum financial return, they created a high-stakes business experiment. They were betting they could out-innovate the rest of the industry while deliberately refusing to move at maximum speed. The problem with starting a rival AI lab is that you cannot build a foundation model in a garage. Training these systems requires tens of thousands of specialized computer chips running in massive server clusters, demanding enormous amounts of cash before you even have a product to show for it. Anthropic was starting from zero. They were going up against former colleagues who already possessed deep compute resources, massive financial backing, and extreme momentum. To even turn the lights on, they needed early believers. High-profile tech veterans, including former Google CEO Eric Schmidt, stepped in, helping Anthropic secure over $100 million in their initial funding round. This created a distinct paradox. The founders had to convince these early investors to hand over huge sums of money to fund a company that was explicitly promising to develop its technology more cautiously than the competitors they were trying to catch. By 2022, the race for AI supremacy was accelerating rapidly. Major corporate giants were funneling billions into the space, creating an intensely hostile and cutthroat environment for a new, unproven lab. To keep up, Anthropic took in a massive new funding round of hundreds of millions of dollars, supplied heavily by Sam Bankman-Fried's trading firm, Alameda Research. Months later, Bankman-Fried's FTX empire collapsed in a massive fraud scandal. Suddenly, a huge portion of the capital Anthropic was relying on to survive was locked up in federal courtrooms and bankruptcy proceedings. While Anthropic was untangling its balance sheet from a crypto fraud, OpenAI released ChatGPT, which immediately dominated the public conversation and the consumer market. Shortly after, Google mobilized its near-infinite resources to push its own models to the public. Facing a frozen balance sheet and rapidly expanding competitors with household names, Anthropic's bet on a slower, cautious development cycle was put under immense pressure. On paper, these external forces should have crushed their unproven thesis entirely. Instead of folding, the team focused on shipping their core product, an AI assistant named Claude. They engineered it around a specific mandate to be helpful, honest, and harmless, designing a system that could execute complex tasks without needing heavy human oversight to prevent toxic or inaccurate outputs. This strict, cautious architecture turned out to be incredibly valuable. Large Fortune 500 enterprises, which have strict liability and brand safety requirements, were eager to integrate AI, but terrified of unpredictable models. Claude offered them a reliable alternative. That enterprise demand solved Anthropic's resource problem. Amazon and Google stepped in, providing billions of dollars in backing and direct access to the massive cloud computing infrastructure necessary to train and host the models. The major turning point came with the release of Claude 3.5 Sonnet. While previous assistants were largely limited to answering single questions, Sonnet could take a broad objective, break it into steps, and execute a multi-step workflow independently. Developers and engineering teams began flocking to it. Look at this chart tracking Anthropic's revenue. From zero in 2021, it scaled to $1.5 billion by early 2025. Then it shifts violently up. Just months later, it hit a $4.5 billion run rate, making Anthropic the fastest-growing software company in history. Anthropic survived the fallout of the FTX scandal, leaning on the technical reputation of its founders and their track record with early GPT models. Their ultimate growth proved that for Fortune 500 customers, caution isn't a handicap, it's a requirement. By building safety into the foundation of their architecture, they captured the market that larger labs were moving too fast to serve.